Hello traders, and welcome to my video on the 3 inside down candlestick pattern, which is going to show you how you can catch moves such as this one for almost 350 pips. So what is the 3 inside down candlestick pattern? Well, it's a very simple candlestick pattern that you can look for on your charts. You can use it on any trading instrument and any chart time frame. This is the pound-dollar 1 hour chart. I prefer the 1 hour charts and above simply because they contain more price data, and therefore I find candlestick patterns to be more reliable. What you're looking for is a 3 candle formation. No surprise when it's called the 3 inside down. So you're looking for an up candle like this one here, a down candle that goes down at least 50% or half of the body of the previous candle, as this red one does here. And then the third and final candle is also going to be a bearish candle, which breaks below the bottom of the first candle of the formation, okay, or the support level if you like. Right, you can find this anywhere on your charts, but it's important, the ones that matter to us are the ones that signal there is an established downtrend. We wouldn't want to necessarily look to trade these when the market is in an upwards direction, as this is a bearish candlestick pattern, so we're looking to trade in the direction of the trend, which would be a downtrend in this instance. So what we can do, how do we time our entry? First of all, for this particular setup, we can see that there's a resistance level forming here with a triple top candlestick formation here. I do have a video on that if you want to watch it. Basically, this is a formation where the resistance level has been reached at least 3 times. You do have double tops as well. So we have 1, 2, 3. This resistance level is holding up well. Then you draw a support within the triple top or double top candlestick pattern known as the neckline. So that would be around here somewhere. Basically, a breakout of this particular pattern would signify strong bearish momentum. As you can see, there was a big breakout candle here, and thus that would have been a good trade. However, that's based on the triple top or double top pattern. We are looking at the 3 inside down here. Let me just put that support level back. It's worth mentioning that had we spotted this 3 inside down here, we may have had an eye on this support level and the pattern that was forming, and that may have been an indication to just wait to see what would happen following on from the breakout below the support level here. So we have our double confirmation with the 3 inside down candlestick formation. As I said, we're looking for it in a trend. You can use a moving average if you want, or you can just draw a trend line. I prefer trend lines just because they use actual price action and tend not to be lagging as much as moving averages. That being said, I appreciate that some people prefer the visual appeal of technical indicators, and it can be less work, but let's just draw the trend line there. Okay, see, market is trending downwards nicely. We have a descending wedge pattern formed. The triple top, as I said, double top. Some bearish price action here. The bulls are losing power. And we have the 3 inside down candlestick pattern there. So there's lots of indication that this is going to be a strong breakout trade. We could have actually traded the initial breakout here of the 3 inside down. As I said, a breakout below of the initial candle, which would have been here, and the stop loss we could have placed above the level of support from the trend line. I mean, the textbook weighted traded 3 inside down pattern is to place a stop loss above the initial candle. That also would have worked in this instance, as our stop loss would have been here somewhere, which is around 15 pips, which is a relatively tight stop loss on the 1 hour chart time frame, especially when you consider how far the market has moved down since then. There would have been a really good risk to reward ratio on this particular trade. Okay, so once you are in the position, I mean, you don't really want to panic and exit here because you're just leaving way too much on the table. So what I would have done is, as price is falling, I would have just moved stop loss to break even initially and then just trailed the price on the way down. Perhaps closing some of the position just to bank some profits and whilst allowing the rest to run. For example, if we just take this as our stop loss level here, as the price falls to this area, I'd move the stop loss just above the resistance level here. Then as we have this drop down again, you can move your stop loss to here. As price continues to fall, just follow the recent highs as a stop loss level, just locking in the trade. Say we were down here, our stop loss could be here, and we would have already locked in this move for, you know, almost 300 pips. I'm sure you'll agree within the space of a couple of weeks, you know, 300 pips is a great return. So let's just move that back up to the entry point. And the 3 inside down, as I said, it's really easy to spot this pattern on your chart. You're just looking for an up candle followed by a down candle that goes at least 50% the body of the up candle, and a further down candle or bearish candle that breaks through the support level of the initial candle. Okay, as I said, look for this in downtrends. You know, you don't really want to take it against the trend. But yeah, it's a strong candlestick pattern. It's just worth being aware of, whether it's you're using it for an entry, for an exit, or just to filter your trades. I can see another example here. We have an up candle followed by a down candle. There's probably around 50% of the up candle's body there, and then a third down candle that goes below the support. So this is another inside down candlestick pattern. Good thing about this one is we've already had the initial breakout, so we know, okay, we're certainly in a downtrend now. We've seen it form. You know, it's well and truly moving, and also price has sort of formed a level of resistance here. As you can see, that's just around where the inside down pattern is forming. We've had the reversal, you know, the trends come down, we've had a pullback. You actually have a nice wedge pattern forming there as well. Done videos on wedge patterns you can watch. Yeah, as you can see there, the wedge pattern was extra confirmation. Some traders may have waited for this wedge pattern breakout to occur, as it did here, which that support level then became resistance. And then, yeah, price eventually fell off a cliff. No doubt some traders were using this resistance level here to catch this particular breakout. Lots of bearish price action again, another wedge pattern. You can use technical indicators to filter these trades as well if you wish, but to be honest, I think price action's telling you everything that you need to know. Like I said, you can use this on any trading instrument, any chart time frame. I just find the higher chart time frames tend to be more reliable, and also the more liquid currency pairs if you're trading Forex, just because they tend to have more momentum behind the moves, as you can see from this downtrend here. Again, good money management, tight stop loss, cut losing trade short, and lock in profit with a trailing stop to maximize each move. Okay, hopefully you found something useful in this video. This is the 3 inside down pattern. I'll do a video on the 3 inside up, which is basically the same principle but reversed to the upside. Please like and subscribe for more. Thanks for watching.